Hey guys, what's up? So today's video is actually very special because I'm going to talk about the Ethereum Renaissance. And I say this because this is now coming at a time when Ethereum is going through a major shift, not just a technical shift, but also a shift in the way the entire organization has been working. Now, I'll be honest, I've been covering crypto and, in fact, have been working in crypto now for almost 5 years. And in these 5 years, I've seen the highs of Ethereum and I've seen the lows of Ethereum. And the lows of Ethereum were terrible because suddenly you had this other virtual machine called Solana. And simply because people were trading a lot of memes and it became this giant casino, people have started people started confusing what a blockchain is capable of doing and what it's actually designed to do, right? And so the title of today's video actually comes from Benji, who said the Ethereum Renaissance, right? So what is the Renaissance about, right? If you go back to when this term was initially coined, it was coined in Europe, and the whole idea of Renaissance was a rebirth of knowledge, right? When creativity had taken over Europe, and you had new forms of art, new forms of experiences and ideas, either in the form of music, culture, art and craft, all of that basically just erupted in Europe. And so it was this period of transformation for the whole of Europe. And this is exactly what Ethereum is going through today. And we're going to talk about a bunch of these things. But the first thing that I want to talk about is basically this note written by Ryan Watkins. For those of you who don't know who Ryan is, Ryan was previously a researcher at Missouri, and now he's the founder of Capital, which is a liquid crypto fund, hedge fund. And he made some very pointed remarks about Ethereum, and he says that the more time passes, the more I believe crypto natives have completely lost the plot on ETH, and that it's becoming impossible to replicate the product that Ethereum has built. So what he's saying is that crypto natives, people who spend all of their waking hours on crypto Twitter, right? They have become so negative about Ethereum. They've become so confused about what Ethereum is and what it's capable of and what Ethereum's core mode is, that they are now all over the place. They just don't know why this is such an important technology and why Ethereum is the place where the transformation of decentralized trust based applications will find its home. He goes on to say that there is no other ecosystem, right, which is offering a solution to create a World War III resistant, globally shared settlement system. And we've come to understand you can't realistically do so anymore. He makes a very interesting comment. He says that what Bitcoin was able to do and what Ethereum was able to do, they were able to do it because when they emerged, it was a unique social, economic, and technological condition. And because those conditions existed way back in 2009, and then when Ethereum came about in 2014 and 2015, we don't have those conditions anymore. And so GTM, in the way that had happened organically for Ethereum, when really smart people around the world who were interested in this technology all came about organically and started contributing their ideas and grew Ethereum to what it is. And which is why today he goes on to say that I used to wonder how much any of this would matter to institutions. What he's talking about, what is it that matters to institutions? uh, Credible neutrality matters to Ethereum. So just think about it, like if you're a large banking institution, right? Or if you're a sovereign nation state like China or America, right? Why would you want to go with a private blockchain like Solana, which is so centralized? It makes no sense. They would want to trust an impartial system, and that impartial system is none other than Ethereum. And so now the whole modular thesis, the whole roll-up centric ecosystem of scaling Ethereum will eventually play out. And in fact, I was looking at data from, let me just find it out for you guys. I was looking at data on Artemis. Let me just grab that for you. Artemis. Yeah, I was looking at this data and I was pleasantly surprised to see that if you look at the top chains by fees in the last 24 hours, EdgeX has now overtaken Hyperliquid, and EdgeX is actually an Ethereum L2. Another chain which is doing really well is now Lighter, which is a perpdex, and so it's interesting that these use cases are now all being built on Ethereum as a scaling solution. And so while people were talking about Hyperliquid as being this like crazy place where all of perp dexes would happen, it's actually happening on Ethereum, on Ethereum rollups. Another interesting data point that you should look at is that was the Fosaka upgrade is now here, and what the Fosaka upgrade is it introduces, it reduces the cost of using Ethereum, because now you can post more transactions per block. It introduces 8x more blobs, meaning rollups can post more data. It also introduces something known as peer dash, which basically reduces the amount of data that rollups have to post on Ethereum, right? And subsequent confirmations. So this is basically going to improve the transaction throughput as well as unique app use cases. So all of this put together, you can already see how much it is benefiting Ethereum, because I was looking at this data from Farsight, which basically captures ETF flows, and it's quite clear that liquidity is now back into Ethereum, especially on the retail ETF side of things. Yesterday, we saw $178 million of inflows. Before that, it was $36 million just 2 days back. So you can see in the last, since 21st December, almost 3 weeks, we have, except for 4 days, we've seen continuous inflow of capital into Ethereum. And not just that if you look at the strategic ETH reserve, and if I show you Bitmine, which is one of the largest buyers, you can see it has consistently and continuously every single week added to its Ethereum stockpile, to the point that it now owns over 3.8 million Ethereum, or 3.2% of the world supply. And you know what's crazy? What's crazy is that in the last 7 days, uh, these ETFs and these digital asset treasuries which are buying Ethereum, plus the Ethereum that is burned as a result of transactions that happen on Ethereum, together they have consumed 200,000 Ethereum, and this is against the weekly issuance of 25,000. So you can already see the supply mismatch between how much is being demanded by these buyers versus how much is being created through the protocol. So that's a very positive sign. And also, if you look at fundamentals like real world assets, for instance, I mean, today this number stands at $18 billion, and I was hearing, Paul Atkins, who's the chairman of the SEC, and he said that almost everything that can be tokenized will be tokenized. And what this means is, if you look at this RWA league table as it stands today, Ethereum completely dominates every single chain. I mean, the difference is more than 12x if you compare number one to number two. More than 300 real world assets, $8 billion of US Treasury debt, all of it has been tokenized on Ethereum. Companies like Fidelity, companies like Amundi, these are like giants in the TradFi space. And if these giants have decided to use Ethereum as their settlement layer, or as their token issuance layer, that is quite telling, guys. That's quite telling. There was another thing that came on my desk today, which is the Commodity Futures Trading Commission, or CFTC, which is the regulatory body for all commodities trading in the US. They have now issued a new circular and have allowed ETH as collateral in the US. So what this means is, for all of the trading that happens on commodity exchanges in the US, traders can actually use Ethereum as margin money to trade more, to get more leverage. So you can already see the institutionalization of ETH is very briskly following the institutionalization of Bitcoin. And now we've already missed the opportunity of on Bitcoin, because Bitcoin is a huge asset. It has become this large global nation state asset now, if you may. But Ethereum is yet to go through that journey. And all of these recent changes that has happened to Ethereum, whether it is the Fusaka upgrade, or it is the institutional adoption, or massive stablecoin, adoption around the world, banking sector coming into crypto. All of this just points to one thing, that Ethereum is going to be that asymmetric trade as we move into 2026. So, I'm going to wrap up this video. I'm going to go do a small one. But just looking at the chart today, finally we're seeing on a weekly basis 3 straight weeks of Ethereum going up. So it has clearly broken that downtrend that we were seeing. And so I feel like now is a good time to start accumulating Ethereum. I don't want to give any price targets, but I am very, very confident that Ethereum will attract a lot of institutional liquidity. Ethereum will run, because for unless Ethereum runs, you will not see any of the altcoins run. And with the evolution of DeFi, with institutional credit on chain gaining a mainstream adoption, with companies like Robinhood deciding to build on crypto and on Ethereum, right? That's a big news. And let me find it. I was actually listening to the CEO of I'm sorry, the head of Robinhood's crypto moves, and he made some very interesting commentary. Let me see if I can find it for you guys. Let me see where we have it. Sweep, Ryan, PG. Okay. No worries. Unfortunately, it's not opening. But he basically made this comment that Robinhood decided to build on Ethereum because Ethereum uh, has credible neutrality. Ethereum has deep liquidity, and Ethereum scaling modular approach actually allows them the flexibility to build the trading systems that they need with the controls that they need. And so that's humongous, because if an organization like Robinhood, which has been one of the best performing stocks in 2025, if they put their thumbs up on Ethereum, you can just imagine how this game is going to play out. So my recommendation would be to keep a strong focus on Ethereum on your portfolio. Your allocation could be as high as 40 to 60%, because it doesn't have the same risk frameworks that other assets have, other altcoins have down the risk curve, and it gives you a tremendous asymmetric upside opportunity without actually going all crazy with your portfolio. So that's all I wanted to say and cover today. I hope you enjoyed this video, and I'll see you again next tomorrow. Until then, sayonara.